Hi everyone, welcome to this time's Grounding Finance. Last week, China's bonds market changed with the London negotiation. Some financial data came out last Friday, but nearly changed nothing. The bonds market still wandered within a 5 basis point space and looking for a clear direction. So, as usual, let's first see the whole picture of China's bonds market, then check out the details of it. Alright? The total bond yields curve went down a little bit and was becoming tiny flat compared to the week before. Yields of 3, 5, 10, and 30 years terms went down 1, 0.1, 1, and 2.6 basis points. If we compare to the one of December 9th last year, the curve kept twisted and flat. Yields of 3 years term increased 4 basis points, 5 years term decreased 4 basis points, 10 and 30 years terms went down 27 and 26 basis points. The spread between Chinese Treasury bonds and commercial bank perpetual bonds kept at the same level, with 5-year spread was 45 basis points. About actions of investment agencies, for the short and middle-term bonds, big banks and policy banks bought 79 billion yuan, city commercial banks sold 71 billion yuan, and for long and ultra-long-term bonds, funds bought 121 billion yuan, whereas agriculture and commercial banks sold 85 billion yuan. Okay, next, let's check out details part and see what happened last week. In terms of fundamentals, first, inflation data came out. CPI and PPI were minus 0.1% and minus 3.3%. CPI was the same as the former value, but the PPI was worse than the previous one. The data denote that the prospect of China's economy is still in a weak position. The efficient demand of social consumption and credit need to be stimulated, and more high-strength macro policies are expected. Second, financial data was released last Friday, the basic tone for which was nearly unchanged, that the financing of government bonds was still the major pillar of the total aggregate financing to the real economy, takes more than 50% of it, which just corroborates that the financing demand of private departments needs to be stimulated, improved, and cared for constantly in the near future. Third, the London negotiation, which had some agreements and made some constructional progresses. The total tariff level for China stops at 55% for now, which is increased compared to the last year, and will give small burdens to China's economy. I see this as a suspension period, a short ceasefire time. I think we have a long way to go to end the real tariff war. But for now, have a break and take a breath are good for both China and the United States. Token all, the total macro environment is still by the side of China's bonds market. No obvious negative factors are seen. From long and ultra-long-term view, the bonds market has some backups from the big picture. For funding conditions, the total vibe was going to be a little tight compared to the week before. The financing price for non-banking agencies went up 5 to 7 basis points to 1.55%. But the PBOC announced another 400 billion yuan reverse repurchase operation last week. So the total volume of this month will be 1.4 trillion yuan, increased 200 billion yuan compared to the last month. These actions shows the caring attitudes to China's bonds market. I don't think there are big worries from funding condition. So from short and middle term view, the increasing risk coming from liquidity situation is small. So what will happen next week? First, tax season of June is upon us from next Monday, so we should watch out whether the liquidity will be tightened. Second, the economic data will come out soon, and let's see if there is any surprise from fundamentals. Tariff things will cool down for a while, but I look for more dramas about Trump's doing to other countries. About bond investment strategies, now China's bonds market is in a room where the roof is a better prospect of the economy recovery, and the base is OMO interest rate 1.4%. We have a small place to trade. If you're a big gambler, you can just enlarge the duration of your portfolio. Like I said before, there is some evidence approving your actions. But for me, I'm not a very aggressive guy, so a pyramid kind of portfolio is more fits me. I would like to keep it for a while. So as always, if you want to know more useful financial information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding, experience, and my investment strategies, and I'm waiting for you. So bye guys, until next time.